Welcome to the Passive Income Podcast. Posse by clicking that subscribe button below. Super excited for this episode. Joining me is Courtney, aka Stonk Enjoyer, aka Covered Calls Barbie. Please go ahead and give yourself an introduction.
Hello, hello. Thank you for having me, Dividend Dave. I am kind of a confusing person with both those names. My name is Courtney. My temporary X username is Covered Calls Barbie because I thought it was so much fun. I probably won't keep that long term, but my newsletter and my personal brand is Stonk Enjoyer. And so it's so nice to be here, and I really appreciate you having me.
Yeah, exactly. And thank you so much for coming on and spending some of your time with me as well. I really appreciate you and your time. So yeah, let's just get right into it
Do it.
and see where this conversation takes us because I have a lot of kind of thoughts and discussion. First up is sort of your TikTok. You do an amazing job at making fun TikToks about investing because that is really difficult, right? Like making just a fun random TikTok, you can do that, sure, but actually making a fun TikTok about investing, how do you do that?
I mean, first off, thank you. I think as a Gen Z person, a lot of people are like, "Wow, you're bad at making TikToks," which is true. Like I'm pretty bad at it. I'm not on TikTok. Like I never check it, but there's such a great way to get your point across. And I kind of started doing Stonk Enjoyer and really pursuing this path because I wanted to make really digestible, fun, entertaining, but also informative content. And TikTok is a great way to do that in like a really easy way for me as a creator. Um, they're like very fun to make, but I honestly like get so insecure as I'm making them. Like I'll be like sitting here just wanting to like rip my hair out because I'm like, that was the most awkward thing I've ever seen myself do. But I appreciate you saying that because that's the goal, is to create really just like lighthearted financial content and try to lower the intimidation barrier to entry of like learning about
Right.
finance. Don't have to be a technical person.
Yeah, and that's a great point as well. A couple great points there. Lowering the barrier to entry, just and like you said, Gen Z. So you're obviously a much younger person, and things are so different for your generation than they were way back in the 80s, even early 2000s, and it's a whole different world now, and you have all these things at your fingertips, including TikTok, and I was actually just I think I saw it maybe morning or late last night with your TikTok about the inverse Kramer ETF, and I was just like, "Oh, this is gold."
Yeah, also sorry if there's any like feedback on my end. It's Fleet Week in San Francisco, so there's like fighter jets flying over me and it's kind of crazy
Oh,
looking.
wow.
Yeah. I'm not sure if you
That's
can hear that
that's
on your end, but if it gets randomly loud, it's because there's fighter jets.
yeah, no worries. I have trains going behind me all the time too, so same. And that's a good point. We'll just point out that Courtney is in California, and as everyone knows, I'm in Canada. So um, we'll talk probably a little bit about the differences and similarities of our countries, but at the end of the day, we're just going to really talk about investing and I know that you're well right in the name of Covered Calls Barbie. So let's get into sort of that idea of options trading and how did you get started with that?
Yeah, let's do it. I guess to start, I always like to say it's never investment advice, and I only make content for entertainment purposes only. Um,
Exactly.
I say that
We're
way too
just two
much.
people having a conversation. This is not financial advice.
Yeah, and so I think going back, my background is in the financial services industry. So I started at Fidelity, and I was on the institutional side, but they just have quite a bit of regulation around what their employees can do options wise. So I didn't even touch it.
Right.
But I took my Series 7. I was a COVID graduate, so it was actually the perfect time to be studying for your Series 7. Because I was like, I can't rewatch Game of Thrones. I might as well study for my Series 7. Um,
Did
from
you
there,
just call yourself a COVID graduate?
yeah, I use that term all the time. So I graduated college May 2020. I that's a term I throw around, but you're not the first person to be thrown off by it.
No, but it makes 100% sense, right? Like that's if someone in that situation of graduating college in 2020 or even 2021,
Mhm.
you're a COVID graduate where you're thrown into this really awkward world where the whole world is shut down more or less, like borders are closed and it was a and still kind of is crazy times, right? So I'm sorry for interrupting. I'll let you continue your thought there.
No, I think it's really something that we forget about because for me, I don't sometimes I don't feel like I graduated. I mean, I never walked across the stage. I have a friend and I remember they misspelled her last name on a slideshow for like our graduation because I was glad graduation was just a slideshow. And it basically spelled her last name ending in Shat. And I just remember being like, if that doesn't sum up my entire like graduation experience, um, I don't know what else does.
Right.
Um, but yeah, the COVID graduation thing is a real thing. I mean, you get imposter syndrome of being a college graduate when it's like, no, I went to TCU and I studied economics. I got a 4-year bachelor's degree and worked really hard for it. I just didn't walk across the stage. Um, I
Yeah,
guess all
that's
that being said,
unfortunate actually, but okay.
I know I didn't mean to kill the mood. Let's talk about options now and make everybody loves options. So yeah, covered calls are kind of the only strategy I really deployed at first. But I guess going back to my story, I was on the institutional side at Fidelity and then made the move to Robinhood about a little under a year into my time at Fidelity. I really like the Robinhood mission, made the jump over there. We can get into this later, but my second day was actually January 28th or 27th. I can't remember the exact date, but that was the GameStop situation. That was Courtney's second day on the job. But from there, I like started to get to trade options because Robinhood had a little bit of looser employee policy. And at first, I jumped in with a big old cannonball. I was buying puts, I was buying calls. I was like thinking I was so right. I was like, I'm so right on this Netflix call. There's no way I can be wrong. I think I was like literally a 1 out of 10 hit rate. Like I never got it right. It was like the stock
But you
had
had the confidence. You had the confidence going in, and then you're like, "Oh, I'm getting 9 out of 10 of these wrong."
yes, but yeah, I guess with the options, like being on the buy side, confidence is not key because the stock would have horrible news and the put price would go down. I was like, that's like 1 + 1 = dog. That doesn't make sense at all. So I stopped doing that and I realized I had like some even lots and I could sell covered calls on them. And so I kind of started experimenting with a strategy across all types of stock risk ranges of stocks.
Right.
And any even lot I had, I was going to sell a covered call on top of. I aimed to be extremely conservative, pretty much always 10% out of the money. So that's like well above the strike price. And for like, I'm never chasing high premiums, but that's kind of how I got started. I've learned a lot and I'm still really learning right now. Because yeah, I have plenty of failed option strategies I could share.
Before we get into that, because we all do not love to talk about our failures, but I do feel it's really important to share failures and the lessons you've learned from your mistakes. But just for people that may not be familiar, maybe just give some of the because you just threw out a lot of terms there. So maybe just give some definitions: covered calls, puts, strikes. Those sort of the basic, even options tradings. Like, sort of, what is it? How do you do it? How do you start it? Maybe just some of those. The basic definitions of options tradings, because obviously here on the passive income podcast and even on Twitter and X, the majority of my following is all about the dividend investing strategy, just buying stocks and holding and waiting and every month or quarter to let them pay you to not work for them. So maybe, yeah, if and honestly, I've had a few other options traders on here, as you know, like options trader Chris and Leah the trader, and,
Yeah.
and they've given me these definitions, and I'm still like, I feel like a deer in headlights listening to the definitions. I'm still trying to learn, right? So, um, maybe you're the one who can get through to me.
Yeah, we'll try because we'll keep it very conversational. And again, I could share all my failures really about dividends as well. Like hopefully we'll have
Yeah,
time for that at the end. But I'd say covered call is an option strategy. And I'll talk more about that one than any of the other ones. Cause again, that's kind of the main area I focus on. But basically where the writer of a contract collects a premium to sell the stock at a given price, which is like the strike price. So that predetermined strike price is agreed upon between the writer of the call, which is you if you're selling covered calls, and the buyer of a call. And then the buy side, they come in and they can have the right, but not the obligation to exercise pretty much whenever while they're holding the contract until a given expiration date. It's a little bit of a mouthful, but
yeah,
conceptually, I hope that makes sense.
yeah. And then you also mentioned a lot, so you have to have a certain number of shares to be able to. i- Correct me if I'm wrong. Is it called writing a covered call?
Yes, that's a great point because I think a difficult part of getting into selling covered calls and what makes it a little bit less accessible of an option strategy at first is that you do have to have an even lot, which is 100 shares. So I'll talk more about this and I guess like kind of get into it. It's something I've learned, but it's expensive to own quality stocks in hundreds amounts. So
Right,
at the end of the day, I used to try to sell covered calls on stocks that traded below the $10 mark, but ultimately those premiums aren't even worth the risk. So making that portfolio allocation isn't even worth it, especially when those stocks are typically riskier anyways. And then you
right,
run into just all sorts of assignment risk, expiration risk, and you have to basically set an expiration date so far away, it may be living in a different state by the time the contract expires.
right. So then, what I'm hearing then is like you're looking for 100 shares of more quality companies. That is obviously expensive. So you're looking at things like your Apples, your Teslas, your McDonald's, your Home Depots, your Coca Colas, those types of
Mhm.
companies that obviously are a lot more than $10 a share.
Totally. So it's something I would say you want to build up into. Um, and again, I learned this the hard way. I probably have 15 different, actually probably closer to 20 different stocks I sell covered calls on. Only
Wow.
about 6 of those are really quality names. I'm working on consolidating those positions. I'm doing that by selling more aggressive strike prices to like just collect the premium and in theory sell assigned. So ultimately, like my favorite stock to sell covered calls on is Apple. It yields a dividend. The passive income posse is
Yeah,
clapping.
it's a small dividend, but people do love Apple and love that little. I think it's a something like 1.3% yield, give or take in that range.
Yeah, small but mighty.
Exactly, exactly.
So yeah, so I mean, I really like it. I've held it for quite a long time. But again, that's a really hard one to have an even lot of. It's what at like 173 somewhere around there today.
Right.
Um, I probably bought it. I've been slowly buying more and more. Just it's something I want to build on. But again, that's a difficult thing about it. But I think this is a good strategy, much like dividend investing, that you can work towards and be like, someday I would like to have 100 shares of this stock. But
Yep.
definitely something to
You
keep in
can
mind.
dollar cost average in all day long, right?
Totally, totally. And I mean, you can sell covered calls on dividend stocks as well. And like, I mean,
Sure.
Apple's the same scenario where it's like I get a couple $100 in a quarterly dividend payment and a premium every like month or so. Sign me up. Like
Right.
that's awesome.
I one more definition. You said strike or strike price. Maybe just let us know what that means.
Yeah, so great question. The strike price is just a predetermined price when you're writing a contract, and that's the price at which the buyer can decide if they would like to buy the stock at, and the seller is agreeing to sell the stock at. So in theory, like let's say with Apple, we sold a covered call at 170, 173. And today, in the past couple of days, it's been right there. Well, the buyer could then exercise and we would get assigned as the seller, and then we would have to sell at 173. So then if the stock goes up, I mean, you're just missing out on all those gains. And I
Right.
mean, I've written about this in my newsletter. I call it the dreaded assignment because I once got brutally assigned on one of my Apple even lots that I honestly cherished. So it was kind of
Right.
an
Right.
enormous L for a younger Courtney.
Okay, so let's just say you buy Apple, you get a lot, you get 100 shares at 170. You have a strike price of 173. It goes somebody buys it at the 173. The price goes to say 175, so the buyer's happy. And then maybe the price comes back down to 171. Do you take that money and then reinvest it back into another 100 shares of Apple?
Totally. I'm just kind of living out this story you just told. 'Cause I got sold assigned back in April, and it was right around my birthday. Brutal.
You're
Uh,
like, "Happy birthday to me. Damn
Happy
it."
birthday. I have to sell. I have no choice. Um, and the funny thing is, like, I learned recently that April is like historically the best month of the stock market.
Right.
I'm not sure, like September is the worst. So I was like, what's the best? It's April. The stock market's a tourist like me.
Yeah, yeah.
Clearly. But yeah, I mean, now I'm building back up my even lot that I had to sell assigned, and I've been buying more aggressively like the last couple of weeks in September when Apple dipped below. But I mean, at first I was like, I'm not buying it back at 180 something. I think that's like a lot for Apple right now.
Right.
Yeah.
Awesome, very interesting. I feel like I'm actually starting to get this a little more, and like I said, I've had conversations with a few other options traders, but I'm actually starting to understand a little bit better of what it is and how it's done.
Yeah.
And yeah, of course, we're all here to try to, make more money. That's the whole goal, right?
Yes, just like being rational economic actors and making decisions on the margin.
I I am curious though, do you have anything sort of stashed away? Again, you're very young, Gen Z. Do you have things stashed away that you're just like, okay, this is my long term investing plan. I'm just going to put whatever into whatever. And I know in the U.S. you have, because again, I've had so many American guests here on the Passive Income Podcast. You have your 401ks, your Roth IRAs, and all those different things.
Oh
So
yeah.
I'm just kind of curious about your long term financial outlook as well.
Totally. So yeah, the option strategy is very like short-term focused. But and you're speaking my language. I have a 401k, I have a Roth IRA. Not too much to brag about in those. They're not huge, but
But you're young, so you've got plenty of time to make them grow,
we've
and
got
just
we've got time.
that snowball effect and compound interest, the power of compounding. So again, sorry to cut you off. I'll let you finish your thoughts on your sort of some of your long term
Yeah.
investments.
But yeah, no, you're so right. I mean, time is the most valuable asset. So I keep that in mind, and like with Apple and then a couple of the other like more quality but still growth stocks. I mean, I'd say Apple's still in that category. I mean, I
Right.
also hold things like Tesla. I also like have a Roth IRA and a 401k. My 401k is in like a classic 2065 mutual fund that's like readjusting and getting more conservative as I become an older lady. Then I'll hold more bonds. Boring. Just kidding. Love bonds. But yeah, I really do like to pick my own stocks. And I think right now, as a 25-year-old with no dependents, that's an okay thing for me to be doing as long as I'm being responsible about it and making sure not too much of my portfolio is allocated towards super high risk positions. But
Right.
I think another side of my strategy is semiconductor allocation. So instead of
That
like,
was another one of your TikToks I saw.
yes, I'm
Was
pretty
it
bullish.
Taiwan Semiconductor? Is that the name of it?
Oh yeah, so that was I love TSM. It's hard because it also has been a loss position for me. But again, we're talking about our L's today. Like I'm ready to come clean to the passive income posse. Um, yeah, I have a lot of semiconductor stocks as well, and I build my own allocation a lot of times based off of like the Van Eck semiconductor ETF, SMH. That's like the ticker, and I like use those, look at their holdings, and then in the past like 2 years I've been just reallocating towards semiconductors, and then I'm as someone who's very bullish on that subsector of the tech sector.
Well, and
So
you're
these
right
are
there too, right in like near Silicon Valley, so
yeah.
you're very close to the and I get it. Obviously, semiconductors are a huge part of the future. So you're calling it an L today, but 5, 10, 15, 20 years down the road, if this is your long term, these are your long term holds, they may very well turn out to be your biggest winners.
I mean, yeah, that's the strategy because like I think things will just need chips. Like pretty
Everything,
soon there will be a chip in my knockoff Stanley water bottle I bought from Costco, and it'll tell me you haven't drinking enough water today. Like
right?
there's just it's gonna be everywhere. It already kind of is, and I'm not a semiconductor expert at all. I try to make that super clear, but I do like to sector invest, and I like that kind of long-term horizon strategy. So it's the position I've taken. It's done well for me. I wish I would have been more aggressive about closing out bad positions or positions that I kind of have written off as a loss anyway and
Right.
reallocating 2 years ago. Obviously hindsight's 2020, but
Yeah, we all do that. Going, why didn't I sell that when it was at the all time high instead of now when it's like tanking?
yeah, now I'm like, I really could have put a lot more into AMD and NVIDIA and a lot of those names that are like have done
Yeah,
phenomenally.
amazing, right? Nvidia, that's a crazy story this past year or year and a
Mhm.
half. Just yeah, maybe more thoughts on Nvidia. Where do you see that going? Like, can it go any higher? Is it due to come back down? Like that's I don't know. And I'm
Yeah.
guessing you really, in all honesty, you don't know either. You can't predict the future, but I'm just kind of curious your thoughts on Nvidia.
Yeah, I mean, it's also fun to talk about. I mean, you kind of love to see a stock do well like this. To be
Right,
honest though, I'm actually going to post a blog about this in like the upcoming weeks. 2 years ago, again, a younger 23-year-old Courtney working at Robinhood made the call to choose AMD over NVIDIA to put a larger chunk of like my portfolio in. And so I did it. It's been fine. It's actually like you can't complain. A win's a win. But
right.
obviously, we all have FOMO and nobody's perfect. And I look at that NVIDIA like couple shares I own just to again because I was trying to make a like allocation based off of these semiconductor ETFs, and I'm just like, well, gosh darn it, that's just a dadgum shame. But ultimately, I think like it could be overpriced. It seems overpriced, but
Yeah.
I think again, like I'm very bullish on the industry and thinking in terms of 5 and 10 years. So if it's overpriced and it corrects over the next year or two, pretty hard, that's okay because I'm
Because it
not worried
still
about
has yeah, I see what you're saying. You're like, it could correct there could be a price correction in the next, 12 to 24 months, but look
totally,
further down the road where it still goes up after that, right? So,
totally.
yeah. You mentioned, like, sector investing, so I'm just kinda curious, are there other sectors that you dabble in or invest in?
Yeah. Sector wise, I'm mostly focused on like the subsector semiconductors. I have a little bit of energy, mostly clean energy. But I like hearing people talk about sector investing that really know what they're talking about
Right,
and
yeah,
even
yeah.
try to time the market. They're like, oh, we're in like this stage of the business cycle. So we're gonna buy consumer discretionary. Like, let's get in there. But at the end of the day, I'm so long term that I just am bullish on semiconductors and I'm sticking with that. I think one thing I made my biggest mistake on, which this isn't a sector, but it kind of has a similar feel when you talk about asset management, is emerging markets and foreign stocks is where I've honestly taken a lot of my biggest losses as an investor.
Okay, well, let's talk about that.
Yeah, let's get in it. I didn't even mean to start talking about all my L's, but it's more fun. Like we don't need to sit here and say our all of our like best trades and how perfect we are all the time.
Well, exactly, because no one's perfect, and, obviously, we do love our wins, and we do love to celebrate the wins, but, hey, we all know that we learn so much from the L's as well, right? So, um, foreign markets, and emerging markets, I don't know, I'm just gonna throw out, like, I don't know, Latin America, South America, Africa, wherever else. There's obviously tons of places that you can invest in, and there's probably some great companies in some of those areas I just mentioned, but it's like us sitting here in North America, Canada, and the US, you have to do a lot of digging and a lot of research and a lot of your own, due diligence to find out what those companies are. And honestly, we're not going to do that when we can just go and invest in the companies that we know that we use every single day. Again, going back to like what I said, the McDonald's, the Coca Colas, the Home Depots was
Totally.
right. So um, I don't know if you have any further thoughts on that.
Yeah, you're right on. I think again, a younger Courtney, I was starting at Fidelity and I was making a lot of my foreign stock allocations, not necessarily just emerging market, but majority emerging market. And I was like using Fidelity's emerging market funds to be like I like was using mutual funds and ETFs that they made, and I worked with some of the fund managers sometimes. So it was like I'm going to use those, create my own allocation. So I used to be somewhere around 15% foreign equity. Now my equity holding is closer to 8. That's just within the last 3 months. It really took me until now to just say a loss is a loss and I want to double down on my other strategies and I need to like close out some of my risk because
Right.
I'm way too aggressively oriented right now. But really some of my holdings like Wix.com, Alibaba, both Chinese companies that have just honestly tanked, like taken
Yeah.
such a bath. And then same thing with like Fiverr and then Mercado Libre, just emerging market companies that are solid. And I broke even on some of the positions. So they maybe bounced back. But at the end of the day, you're right. They're not familiar to me. I don't
Yeah.
know their story. They feel extremely risky. And I don't like seeing them in my portfolio. I don't want to say I like just traded because of those emotions they brought up, but I also like think there's a lot to say about like the sentiment you feel towards your own portfolio. And if I went over 2 years of just like dreading the existence of these companies' allocation, I needed to sell and like kind of stick to what I know a little more.
Right. You mentioned Alibaba there, and I'm just curious, have you ever purchased anything from Alibaba, from the Alibaba website?
No, I haven't. I'm not a big online shopper, so I barely use Amazon. But yeah, I haven't used Alibaba, haven't used Mercado Libre. I think yeah, there's so much upside in a lot of emerging market companies, but I might not be the one to capture it because it's just too much risk, and I'm enjoying. I think I'm enjoying and seeing a lot of like growth and profitability doing conservative covered calls, things I know. So again, it's all about sticking with what you know and
Yeah, go
when
with
you can
what you know,
experience
right?
that. Totally.
I just quick story is I have bought a few things from, Alibaba, but I can
Cool,
guarantee you I've
cool.
bought tons more from Amazon, like,
Yeah,
100 times more purchases from Amazon than from Alibaba, so that kinda, again, goes back to, uh, again, being here in North America, what we know, what we're familiar with, right? So,
totally.
um, I guess with that, let's transition into some of those types of companies, your Amazons, your Googles, again, you're right there in San Francisco near Silicon Valley, the tech sector, thoughts on everything, Meta, uh, I'll let you take over.
Yeah, the tech sector is always fun because it's always in the media, for better or for worse. But
Right,
I think the tech sector, it's hard to feel strong conviction on it as a broad sector because in America right now, or in the United States, like we're seeing a lot of anti-monopoly regulation against like Amazon's that like has a big class action against it, and that's a big company I hold in my Roth IRA, and it's just like, so bullish on this business model. I
Right.
mean, it's just undeniably dominant.
Yeah,
But
actually, isn't both Google and Amazon in the courts right now? Google about like, or sorry, Amazon first is like all of
yeah,
their searches are bringing up Amazon first products and not necessarily anything else. And then Google is
yes,
like, I can't even remember what I read about Google, but you know, obviously once the courts get involved, you're like, oh man, do I really want to do I really want to invest in something that has like legal ramifications that could
totally.
be coming?
Yeah, it starts to feel like the same sort of political risk that you have with these like foreign or emerging market companies that you're holding, where it's like this should be so great, but the regulatory environment is not letting it thrive in the way it should. That's in no way my opinion of like on the actual matter at hand. I'm just talking about the stock.
Yeah, right. Yeah, yeah.
But yeah, it feels like I can't even keep up with the reason that Meta or Facebook specifically or like Amazon, Google, like Apple, why they're under scrutiny, but they often are. So that's one headwind I think you really have to take into account when thinking about the tech sector. Otherwise, like I think there's a lot you can definitely make the argument that it's overpriced.
Right.
I think a lot of the passive income posse would agree with that point because y'all like value, and the tech sector is almost the opposite of value. So those are my two like big headwinds in terms of like why you would be bearish on that. But I mean, tech has been the dominant sector over the last what decade or so, probably
Yeah,
two.
2 decades pretty much.
Yeah, so it's like it's hard to argue with it um when it seems like that's the direction we're headed in, but again, there's definitely headwinds and reasons to be bearish on it.
Interesting. Now, and correct me if I'm wrong, I think several minutes ago you mentioned, renewables, like energy, renewable energy, and
Mhm.
so I'm gonna kinda play devil's advocate here and mention, I guess both, well, oil and gas, LNG, those types of things. Where do you see both sides of that coin, I guess? Like, the wind and solar versus the traditional oil and gas, liquid nitrified gas, those types of things.
Great question. I'd actually love to hear your thoughts. I guess I'll go first because you asked, but I'd love to throw that question back at you.
Yeah, yeah.
And for me personally, I want to be extremely bullish on renewable energy, whether it's like solar. I invest in solar companies. Are they top performers in my portfolio? No.
Nope. We already knew the answer to that, didn't we?
Oh yeah. So it's hard. It's like I really do want to see like us clean up the mess we've made of our client climate.
Yeah,
But also it's like ESG investing, the E part of it can be just so hard to have conviction on because these stocks just mostly struggle, or it feels like what are we actually doing? Like, is there a real fix here? But ultimately, I try to hold renewables. I don't really hold any oil, but I mean, as far as I know, I don't know what's in my 2065 401k fund. I'm sure there's Exxon snuck in there. But I respect the decision and totally understand you're a rational economic actor if you're investing in a lot of those like bigger oil companies.
yeah, for sure. And yeah, fair points. And just to kind of come back because you wanted to hear my opinion as well. So,
Yeah,
a
let's see.
few thoughts there is like, you know, there are so many petroleum based products in the world today that we're not getting away from oil anytime soon. Like, there whether it's plastics or there's just literally thousands of tens of thousands of products that are petroleum based. And so, you know, oil is here to stay for a very, very long time. And I do agree with you wholeheartedly, 110% that, hey, we need to clean up the mess that my generation and generations before mine made, because your generation is now kind of counting on you, is 110% counting on it. And then the generations beyond you, like you mentioned 25. So at your age, some of your friends are having kids, they have,
Mhm.
babies. And so that generation is now needing a much cleaner world to live in and grow up in. So, I want to be bullish on the renewables, on the wind and solar and other clean energies, but
Mhm.
it is extremely hard. And I'll tell you the reason why I find it hard is because also really, really feel that there is a lot of what I call, or what I guess most people call greenwashing, where
Totally.
it's like, hey, EVs, electric vehicles are great, they're amazing, but I really feel even Tesla, I feel is greenwashing. The amount of mining it takes to mine the lithium to go in the batteries, the amount of mining it takes to make all the copper. There's something like 4 or 6 times as much copper in an EV than an ICE vehicle. So
Totally.
yeah, there's a I feel like there's more than two sides to that one, right? Like, and it's really tricky. Like I said, we definitely wanna leave a cleaner, uh, planet to the future generations, but at the same time, we're so deep into oil, and like I said, these petroleum-based products that, our lives depend on. So, I obviously, I don't know what the answer is, but that's a lot of my thoughts on that, and I hope that provides you some of the insight you were looking for.
Yeah, I think you capture the sentiment so well. That's like a lot of question marks surrounding how to feel like your portfolio is environmentally responsible. To be honest, I'm looking for better solutions right now. I think, yeah, I hold a couple solar companies, maybe like one or two, or like renewable energy companies.
Yeah.
But at the end of the day, like I'm looking for a different option and would love to like see a good allocation in that regard. I guess it all comes down to like this idea of why do we invest our money? Is it on our own? Like, is it do we invest based on our morals, or do we invest just strictly as like price capturing individuals that
Right.
seek to optimize for profit? I think there's like a very real tension between those, and in this case specifically, where it's difficult to make a decision, but you want to make the right one, and the right one is incredibly unclear.
Yeah, I don't really wanna get into these companies too much because it's totally off topic, but you see it a lot on X, the app formerly known as Twitter, and so
Yes.
many people who will just not invest in the tobacco companies because 'cause they're just morally against it, and then so many other people who be like, "Hey, it's making me a buck." So, and I've got nothing against either side of that argument. If it's making you a buck and you're okay with it, good for you, and if that's your moral compass, good for you too, right? So, and I just see the similarities there when it comes back to the renewables of or renewables versus oil and gas, and they're just I'm gonna stop talking on that one.
I mean, yeah, I think we could go down this spiral forever because I see it too. And I think it's something you kind of have to do on your own. You have to make your own decision. How am I
For sure.
going to handle this and like rationalize my own holdings, and um, kind of go from there and build based on your own sentiment?
I'm curious about a few other sectors. So I've had well over 100 different guests here on the Passive Income podcast now.
Yeah.
And the split is roughly 50-50 Canadians and Americans with a few, Brits and other Europeans thrown in the mix for good fun. And so the vast, vast, vast majority of Americans, I want to say 95% hold these two ticker symbol, um, Realty Income, ticker symbol O, and SCHD. And I'm just kind of curious your thoughts on those two, because like I said, they're extremely popular amongst the Americans and honestly even some Canadians that hold them as well. So um, just thoughts on those two.
No, I love that you ask. I see them on X all the time.
Yeah, well, how can you not? It's there all day, every day, right?
Totally. I like make a lot of jokes about SCHD, like Charles Schwab's dividend ETF. I honestly, I'm not going to get into any specifics of it because I really don't know much about it. I do not hold either, but I make some jokes like I just want someone to look at me like dividend Twitter looks at SCHD.
Yeah, I've seen tweets like that before. Yeah.
Totally. Like, I love the love for it, though, and I'm not a I don't have any really major dividend, like, holdings in my portfolio, and I don't know if I'd ever invest in SCHD. I think maybe in 10 years, that would look like a really attractive holding for me, but right now,
Right.
it doesn't really fit into my strategy, but I love the bond that, like, it brings, like, dividend.
People on the app, right?
Oh,
They
yeah.
just there's so much, like you said, there's so much love for it, which is absolutely amazing.
Yeah, do you hold it?
No, I don't actually, I don't have any US stocks. All of my holdings are Canadian companies.
Solid. Okay, very cool. That's interesting.
Yeah. So and my only real like uh what's the word? Allocation to the US or other foreign markets is basically through holding the Canadian banks, because Canadian banks own every, well, not everything, but they own so much, right? So having that
Totally.
little piece, you're kind of exposed. You have that exposure to other markets through that.
Yeah, definitely.
Oh, and yeah, Realty Income, ticker symbol O, also another obviously solid one that's very popular there. Like you said, the love within the community for those two is unparalleled. It's amazing. Uh,
Yeah, it's crazy. I have, like, one stock I held, or I still hold, called ticker symbol KRP, I'm actually totally blanking on the name, Kimball Royalty Properties.
okay.
It's like an 11 to 12% yield over the last, like, couple of years I've held it. It got PCO'd, or, like, position closing only on Robinhood. I have no idea why, but I'll claim my L to the dividend, to the passive income Posse dividend community here. I definitely, like, when I quit my job at Robinhood to travel, I was like, "I need to get paid. Let's do passive income." And, yeah, I did, like, 100 shares of this KRP, and, like, you really don't I really just didn't think about how much we need income every month, and I was working at the same time, just, like, not at a job like I was at Robinhood, and yeah, $40 doesn't cut it. So if you're gonna do a dividend allocation, you have to do a little more than $40 in buying a random dividend stock. But
Right.
I have one blog post about that, and it's a very real, like, posting my L's, but I've learned a lot from it, and I think if I were to deploy a dividend strategy and reallocate my portfolio, I would do it extremely differently and very strategically.
Yeah. Yeah. I get that. You definitely need to bring in more than $40 a month to live in this day and age.
Totally,
And that's obviously, going back to what I said several minutes ago about dollar cost averaging and just building up that position, building up that portfolio, and watching that snowball take off, so that 40 turns into 80, and then turns into 200, that turns into 600, that turns into 1,000, and then you're actually getting somewhere. It's like, oh, I'm actually making $1,000 a month in dividends. Now we're actually, in a position to start. Hey, it's like this $1,000 could actually pay for quite a few things out of my monthly bills. Um,
totally.
I am curious though, like, obviously you do hold some stocks that do pay a dividend, like the Apple, and you know what? At the end of the day, when that dividend comes in, you don't say no, thank you, right? Like, you're very happy to see whether it's $2 or $10. You're like, hey, that's another 2 or 10 or $50 in my account, right?
Totally. I like I love my stocks that bear me a wee little yield.
Yeah,
Um,
yeah.
no, yeah, I never am gonna just walk away from, like, $50, but um, I definitely look for growth first, and then if it has a dividend yield, that's like the cherry on top of the
Right,
cake.
yeah.
That's
And
kind of
at
my
your
strategy.
age, that's exactly what I hear from so many people in their 20s, that I'm looking for growth stocks and things that are going to basically grow with you, right? Into your 30s and into your 40s. You've got so much time.
Yeah, totally. And, like, with covered calls being my main strategy, the dividend is just like this extra, like
The
little,
cherry on the top, like you just
yeah,
said.
cherry on top. But like I remember I meant to say this earlier because like with covered calls, which you could almost make the same argument around about a long-term dividend strategy, but like the long-term dividend strategy takes way more way
Time.
less of the like need to fulfill your instant gratification. But with covered calls, like a colleague of mine at Fidelity once said, if you it's like if you saw $20 on the ground, why would you not just grab it? Which a lot of people say that's wrong, but in my opinion, like if you're selling conservatively, collecting those premiums on 100 shares you already own,
Right.
it just makes so much sense.
Yeah. And you know what? You see that 20 bucks on the ground and you obviously you look around and be like, "Hey, did somebody," and you see nobody. You're like, "Of course I'm gonna pick this up and take this $20," right?
Totally. But I mean, you
Like
could
every
also
time.
like you're in front of like a truck or something picking up the $20 because you can just get hit by some unreal
Mm.
like a potential gains, honestly, have having to like of assignment risk. But yeah, that's like a controversial saying in my circle of friends that I like to annoy them by saying that.
Cool. I'm gonna bring this up here quickly, and this is how to find Courtney at Covered Calls Barbie on X, the app formerly known as Twitter, and it is at Courtney M.
The embarrassing username. I was like, oh wait, that's me.
At Courtney. So
That's
definitely,
what
I'll
I
yeah,
handle.
definitely give Courtney Covered Calls Barbie here a follow on X, the app formerly known as Twitter. Here's that inverse Kramer TikTok. So much
There she
fun,
is.
and you've got obviously tons of great content. Definitely make. Oh, this is the inverse Kramer one again.
Yeah, I think I
Tons of great
pinned that.
content. Definitely give Courtney a follow. Sorry, go ahead.
Oh yeah, I was saying I pinned that one, but thank you so much. I'd love to follow. I'd love to get more involved in the like passive income posse. I think it's great, and it's been so fun to chat. But yeah,
I saw this tweet from you a couple days ago too. Seeing a movie about meme stocks while at a meme stock. This is amazing.
it was memeception. I was like, we're a meme within a meme. But yeah, I saw Dumb Money earlier this week, and again, as someone who worked at Robinhood as like a representative and like a broker on the trade desk. Very interesting. It was a very interesting experience.
Was it a good movie?
I don't want to promote it because it was extremely vulgar, in my opinion, which was a little bit
Oh,
unnecessary. But classic finance movie like The Big Short, of course, Mario Robbie has to be in the bathtub while she's explaining MBSs, and that's going to be brought up in like your econ class when you're in college later.
right.
This was like a little bit over the top in that regard to me. Um, it was entertaining. There was like a lot of truth to it. It was obviously very dramatized. I don't think they got everything right. It glorified emotional investing more than I would have liked. But obviously, nobody wants to see a movie about how to have a long-term, forward-looking, diversified portfolio of stocks. That movie doesn't sell well.
Right. And then this one's a fun tweet too. A man who doesn't think about the Roman Empire. Who obviously that's Sam Bankman Fried.
Yeah, I loved this trend. I had a little bit too much fun with it.
Boy math is buying distressed debt and saying that we're still in the golden age of private credit. Okay. Oh man, I do find that kind of fun and funny that this whole girl math, boy math thing has become a thing.
Totally. I love that kind of stuff, and I think I'll just, like, quickly say, really like Covery Calls Barbie, Stonk Enjoyer, my newsletter, my X account, they exist to, like, make financial information really like funny and entertaining while being informative, but like hopefully that helps people think, okay, like we can learn about options and like learn about Roth IRAs or in any type of investing strategy. And we don't have to be like, it doesn't have to be super technical because I'm not a
Right.
technical person at all. And I'm not
Yeah.
going to get into like a deep analysis. So it's supposed to like be very it's supposed to be funny. Hopefully it is. Thank you for laughing. That was fun. But yeah, that's kind of the goal and make the financial industry a little bit more attractive and seem a little friendlier to maybe someone who would be intimidated by it.
Yeah, that's great. Like, I'm not into technical analysis either. I sure I look at charts, but I'm not going to deep dive into a chart and try to figure out like all these Fibonacci's and all these
Totally.
other, things like that. It's like, okay, all I really want to know from the chart is like it's sort of the, year to date, 52-week highs and lows, maybe the max. Let's see what the all-time high was, maybe see what the all-time low was. Let's see how long this stock has been around or something like that. But and I think you're doing an incredible job of making things fun, and I will put the links in the description below for your, newsletter slash blog, your TikTok. You'll have to send me the link for your TikTok actually, because I've just seen them from your X, profile, and, yeah, I'll definitely get all those links in the description below so you can find Courtney, AKA Stock Enjoyer slash Covered Calls Barbie on all the socials. And yeah, this has been an amazing conversation. Totally love talking to you. Totally have definitely started to learn a little bit more about covered calls and selling options and that I'm still learning. Um, Before we sign off, do you have any final thoughts or anything else you'd like to say?
Nope. Thank you so much for having me.
Nope. You're supposed to say something. You're supposed to have like this mind-blowing ending thought.
For my closing argument, I will be just kidding. It's been so great getting to know you better, Divin and Dave.
Yeah.
I loved what you're doing for the passive income posse. Love to be involved. Again, thanks for having me. And yeah, would always will take another follower on X, and then always would love more subscribers. So if you're interested in that kind of content, you know where to go.
Yeah, link in the description.
Yeah, thank you.
Awesome. Well, with that said, thank you again so much for your time. I truly appreciate you coming on and spending nearly an hour of your time with us here. Like you said, here on the Passive Income Podcast with the Posse. And if you are still here and watching, listening 50 some minutes later, please be sure to hit subscribe.